In this video, I'll show you how I caught this trade on Thursday, 19th of June, and how everyone in our community caught it too. It was a real simple trade, but first let's go over some core concepts. As you might have seen in my previous videos, I don't really use daily cycles, I don't really use any session variations, because they're just too unreliable. When I focus on this context, then I can use the cycles, the variations aligned with the context. But how do I define this context? Well, I derive my context from high time frame price action, high time frame levels, high time frame targets. So I'll show you. So let's see. This is the move that I showed you in the last video, right? I was breaking on these buys right here, and you can see how it went up. You can also see how every single high time frame move is coming from another high time frame level, right? For example, this big sell is coming from a really huge weekly high from the left here. How this buy came from this big daily weekly liquidity here. How, for example, this buy here started from this daily low, right? It took all the sell side liquidity here and then bought. Then we had the buy, and this is the trade we took. So the first thing I did is find a high time frame level. And as you can see, daily FVGs are one of the best levels that exist. Bam, fill, sold. Press filled FVG again, sold instantly. Press filled FVG, it sold. It almost filled a weekly open gap here, sold. I mean, it's real simple. So the first thing I noticed on Thursday was, oh, let me replay the price, was price coming down into this daily FVG. So this would be my first key level that I would be interested in during that day, right? But the problem with FVGs is that we don't have liquidity. FVGs are not liquidity levels. So we either need an inducement or we have to find liquidity from the left, which is right here. We can go to 1 hour and scan what happened there. Oh, and you can see we had this wick, this sell to buy here, right? So we had this sell to buy here, price continued. And this is basically one big piece of price action, right? One chunk of price action. It's a big consolidation. Price keeps mitigating. It's like an order flow chain, whatever. But this consolidation or this big piece of price action is ending right here. Below this, you can see a huge gap. So it's the price disconnected. And basically all the liquidity inside this huge price action is resting right here. So I call this last point of liquidity. So does this FVG have liquidity? Yeah, it's pretty fine, right? Ideally, we would want some inducement from the left. It's not required, but it would be great to have it. So let's see. I'll turn on Asia session. Session indicator. Oh, bam. So let's analyze what Asia is showing us. Well, obviously, Asia is super bearish. And we are coming out of Asia with a really bearish intent. So this usually indicates that we are going to be bullish on Frankfurt or London, but it also depends on high time frame context, which is aligning with whatever we are seeing right now, right? And for the last thing, if I'm bullish, I want to see some target. I want to have a reason to even look for buys, right? But let's say if price delivered perfectly for sells right here, I wouldn't be looking for sells. I mean, I wouldn't be looking for buys because there's nothing to target really. But in this case, we sold from nothing. We did induce some early sellers. So you can see this small buildup right here, this mini breakout. So this will be an FBOS, fake breakout structure. Price keeps breaking down. And then we finally stop them all out. But the thing is, we are trading without liquidity. Again, this is the only liquidity that we created, but if you look at the left, there's no level, there's no context, nothing, right? We are just trading from nothing. We are just mitigating this random supply point right here. What is this telling me? This move is real low quality. It's funded by almost nothing. So I would just see it as a weak high and target for future. So this high should be weak, and the high that it mitigated should also be weak. All right, so I have a level that I trade away from, I have a target that I want to trade into, and now all I care about is how price develops and what confirmation it gives me. So the Asia session just ended. We just broke out of the Asia range. We keep breaking to the downside, and bam, we took out Asia low. We rebalanced, fill this daily FEG. So the first valid trade that you could have taken with our strategy was the relevant break of structure. So we have Asia low, high time frame level, target, everything is good. And Arbos right here. So how to enter it? You have a break of structure, the price breaks the high, comes back, you can execute a buy like this. This would be a more aggressive entry right away with not much confirmation, but I kind of missed this buy. So let's see what price is gonna do. We obviously have this liquidity right here, but it's not that relevant. Okay, price is reacting to this supply zone, which again is not really relevant. It's a random supply zone. Whenever I see price reacting of something like this, I just see it as a trap, to be honest. The trap gives you a fake break of structure down. So this is where SMC guys would be interested in, right? They would see a POI, a choke, a break of structure. They would try to short. Of course, you can take a mini buy here and target the trap itself. Our price even fails to take the trap. Let's see. Okay, so price doesn't take the trap out. They're still reacting to it though. The whole buys is still bullish. And now you can see. So when it comes to liquidity and liquidity rules, we only have this low right here. We only have liquidity from the left taken out. But if you look at the current price action, the active live price action, and you want to see it from a structural standpoint, you'll see that we did not really induce any buyers in the market, right? So wait, where is it? Here. This would be a low, this would be a high, this would be a low, this would be a high, this would be a low. Well, obviously, we are just making lower lows and lower highs. We're not doing anything else. What we would want to see is price giving an F-boss for people to get in and then take them out. This way we would have a ton of liquidity and price would usually just shoot. But because we did not induce those early buyers, price has to collect liquidity in some other way. It has to compensate for the lack of liquidity. And how do you do it is you can still respect the low, price can still respect this low, even though it was created without major inducement. But it will compensate by taking all available internal liquidity, which is right here. As you can see here, price was supposed to take this wick out. This would be a break and retest, right? But it respected it. So it is engineering more liquidity to take later before the main move. So I saw this beautiful liquidity here. I'd go to M15, refine an OB right below our significant liquidity and have a buy limit right here. So we even took out a trap eventually. You got tucked in, it is a little close, but it doesn't really matter. The trade is still a trade. Some people see that price is consolidating here and then get scared. For example, people who got an entry here or people who got an entry here. As long as the trade doesn't reach your objective, your TP, or whatever price level that can change the direction of the market, the trade is still valid. That's why I don't trade. That's why I don't put break evens. Right? You're basically taking a mitigation of a valid trade that was not completed. You don't have to be scared. So even if I got in here, I wouldn't put a break even. I would hold it. Price would tag me in. If it went to extreme, I'd probably add more. Add a bit more. But this is perfect scenario. So price got tagged us in. You can target the equal highs here. Right, relative equal highs. And let's see. So do this little trap here. Okay. Price is reacting to this trap, gave us an F-boss even. Okay, it took out a trap. And then the next day price consolidated, obviously. You're trading after big momentum, so you expect a consolidation. You don't really want to trade this day. So this is a perfect case where you can see a high probable and a low probable price action, right, to trade. This is in the middle of nowhere. Price should be going higher, but price just expanded. So it has a potential to pull back, but it also has a potential to go straight into the target, right? The bias for this day is literally 50-50 compared to this day when you have clear Asia intention, a clear high time frame key level, and a clear target, right? Here you don't really have anything to do. You cannot take any hyperbole trades. So I don't take any trades on Friday. As you can see, price just consolidating, mitigating this random demand, breaking up, down, and eventually ended up with a nice TP. It was a 1 to 9. So yeah, I hope you guys learned something again. If you liked it, leave a comment. If you want more daily content, you can follow me on Instagram. And yeah, peace.